I've heard this, time and again. Banking, they have the right intentions, right? They are, technology vendors think that, they are spending a lot of technology. A lot of organizations, other industries think that you're innovative. But a lot of people who are within the banking sector, they view banking as slightly more traditional industry. So, what is the challenge that the banking industry has specifically when it comes to innovating?
There is a lot of legacy burdens that we carry with us. And that's not only an infrastructure problem, but also from a mindset aspect. That we have veterans of banking. I mean, if I guess you could say, being in the industry almost 2 decades makes me a veteran as well. But you do tend to get used to doing things a certain way, and I think the need for having responsible, ethical, regulatory backed products and services, where we need to adhere to the right governances, those things weigh heavy on us because we're a regulated industry, and we must ensure that we're providing the safest opportunities for our customers to interact with us, and vice versa. And also, we're a trust agent, so there's a lot we would do to ensure that we don't jeopardize that trust. So that's quite different when like I was saying earlier, that you could be a small hustle oriented startup, and you're not burdened by a lot of things. But from my perspective, I think you know legacy plays a huge part in it. Culture plays a part in it. The kind of talent we attract plays a huge part in it. And then you get into the more conventional problems, funding. So there's competing priorities to funding at all times. You on the best of days, you're really having to make that dollar work for what's best for our customers and what's best for the design of the overall existing products and services. So how do we make that dollar stretch into the next 3 to 5 years investment, and really wait for that ROI to come through? So you're going to have a whole host of reasons why not to do something. But at the same time, it's so important to make it an imperative. And the way in which you do your horizon mapping, as I was saying, like you could look at the next 3 months, you could look at the next year, or you could look at the next 3 to 5 years. You have to divide up that dollar of investment into buckets that would give you a high risk, high return opportunity, short term yet very immediate opportunity, or something that we might be looking at as a 50-50 bet in the medium term. But I think that's what managing innovation strategically means. That you must give it its ideas their day in the sun, but you must do it in an intelligent way where you're not kind of making that your only responsibility. It is a responsibility.
That's very, very well put. You mentioned governance, and from all my conversations, especially the ones that I have in Singapore, um, the consistent feedback that I get from technology leaders within the banking sector is that governance is a guardrail and not really a barrier. Does it contribute more to a mindset issue within banking, or is it a real barrier?
I don't think that it's a barrier. I think it's about making your products much more responsible, and the capabilities a lot more useful to our customers, in a way where they feel protected when they're using them. So we'll get into this, I'm sure, later on in this conversation, but certainly, like when we've looked at this like rush for generative AI, and everybody's kind of backing that train. Of course, it's a wonderful technology. It's a great innovation for artificial intelligence and so on. But let's not put the cart before the horse. And we need to protect consumers. We need to protect the users who are going to be engaging with large language models on a longer term basis. So let's get those guardrails in place so that we can really innovate safely. And I give all credit to the Monetary Authority of Singapore for leading conversations around Project Mindforge, for example, that are creating the real um, banking synergies, bringing the best brains towards these conversations so that we can really, as a community, find the best guardrails, which is obviously a learning journey, but at least we are putting that first before we go out and start putting customer facing products and services that later on down the line might become massive liabilities both for us and for the financial integrity of the financial system. So I think the way in which we do that, this model of working together to understand the risks, to work together to understand how you can sort of mitigate those risks, and then create safe environments to innovate and experiment. I think there's no better model in my mind than Singapore, where that happens very, very progressively.
If you were to talk to, another chief digital officer in an organization that's the verge of its transformation journey, so to say, what advice would you give them? What should they focus on?
So I'll go right back to my original opening answer and say that save space for innovation. You have to create, almost like a black box, which is still connected to the business, but is not burdened by their daily routine obligations, where they can start thinking about these pieces, thinking about amazing fintechs that they want to work with, partnerships that they want to create, technologies that they want to experiment, and most importantly, customer experiences that they want to build that will wow and surprise and excite new users, particularly the new generation of users coming in who are so used to, influencing and interacting, and as the Gen Zs are. So my best advice is take that 20%. Basic Pareto principle. 20% doesn't shock and awe too many people to say, "Oh my God, that's too much," or too little. It's a great Goldilocks kind of number, and say 20% of resources, 20% of time, 20% of funding. Let's build the future of financial services 3 to 5 years hence, and give us the space and time and the patience to work those out and be okay with failure for a little while, because we're going to have that eureka moment. So give us the time to experiment.